Hey guys.
Well, good morning
Happy
or good
Tuesday.
afternoon or whatever it is, everyone. I never know anymore. Um, welcome. Welcome to Spark Reynolds Facebook Live podcast, YouTube. Um,
All the
it,
above.
yes. I feel like we haven't done this together in a while, Brian. It's been,
I know we've had a bunch of guests, which is
I
fun and it's
know,
exciting, but this is the OG crew right here. So I'm glad
serious.
to be here with just you, Denny.
And I've missed you.
Well, I have certainly missed you on the show.
So today, kind of excited about this. Today we're going to talk about buying a property with no money down, and it's with a loan called or a program called the NACA program. And Brian, let me start off asking you, what does that even stand for?
Yeah, real basic here, right? So NACA is an acronym, NACA. It stands for the Neighborhood Assistance Corporation of America, and
Now I
it's a
see why they
nonprofit.
abbreviated it.
Yeah, exactly. Yeah, and it's a nonprofit organization. It's designed to help lower income Americans become homeowners.
Which is awesome. Very good.
Yeah.
So what about like a lot of the barriers to getting into buying a home is not having enough money for down payment or closing costs and things like that, or higher payments because of PMI. What happens with all of that with this?
Yeah, so I mean this program is really a dream program for anyone who has felt locked out of home ownership. It's a 0% down payment program. Um,
Wow.
and closing costs are waived, which is pretty amazing.
Yeah, that's
Um,
crazy.
PMI, there's no PMI. Um,
What?
I know it's an incredible program. Um, there's also so you mentioned that down payment and closing costs and cash are a barrier to entry for a lot
Hmm.
of Americans, especially lower income Americans, barrier to home ownership. But also credit is a barrier for a
Oh
lot of
yeah.
would-be home buyers, right?
Hmm.
So the NACA program doesn't do a credit check, if you can believe that.
That's okay. Are we in real life here? Is
I
this
know,
real?
right? It feels like feels like we stepped into a fairy tale here, like a fantasy novel or something.
Serious. So how does all this work then? Is it like a
Well,
specific area? Like you have to go in the far out in the woods somewhere, or how does this work?
well, yeah, well, you have to sign your soul away, right? uh, no, you don't have to sign your soul away, but you do have to sign up as a member with the NACA organization, and you have to remain a member in good standing with them for the
Okay.
entire life of your loan. And that involves, I mean, this is kind of it's a typical nonprofit where there's a lot of like activities and like
Mm.
neighborhood involvement, like community involvement. And as one of the stipulations for getting a NACA mortgage, you have to participate in at least 5 NACA activities every single year for the life of, or for the duration of your loan with NACA. Now,
Wow.
if you sell, yeah, so if you sell the property or if you refinance it to a conforming loan or a conventional mortgage, then that requirement ends, of course. But you have to stay involved in this nonprofit basically, and
Now,
remain
what
a.
do you think these activities are? Like, neighborhood get together programs, or how does?
Uh, yeah, I mean, so I can't speak from experience. I've never actually been a borrower in the NACA program. But yeah, I mean, being involved in educating other, lower income Americans, or it's not just lower income Americans. And we'll talk about the exact requirements and eligibility in a moment. But educating other people about how it works. Participating in community events to help other people get NACA loans. Obviously you don't become a loan officer, but you go out there and you help raise awareness about this. There is a nominal membership fee. I think it's $25 a year, which is not going to break anybody's bank.
No, not when
The
you're getting a home.
Yeah, for with no down payment and no closing costs.
That's a
And in
quarter
many
of the
cases,
credit check fee that you usually have to pay.
yeah, exactly. Um, and in many cases, you get below market interest rates for these loans too. So I mean, it really is like a dream loan program for many Americans. Um, Now, you are probably wondering, how does NACA enforce these requirements, right? Like after you get the loan, and they do that by they put a second lien against your property. It's a junior lien for $25,000 that they put against your home to
Wow.
ensure that you do stay compliant. You do remain a member of good standing with NACA and participate in all those community events and so forth. So there is an enforcement mechanism. It's not like you can just show up, get your loan, and then disappear to the hills and never never talk to them again. Um, as you might have guessed, there is an occupancy requirement. This is for homeowners; it's not for investors. And in fact, no, this is also ideally for first-time home buyers, although there's a little wiggle room there. So when you get your NACA mortgage, no one in your household can own any other homes. So it's not
Oh,
like,
wow.
yeah, so that's an important requirement here. So even if you are not listed on a deed, if your spouse is listed on a deed for a home, then your household does not qualify for a NACA
Unless
mortgage.
you throw your spouse out and then no,
Yeah,
just
which
kidding.
happens, right? Like, I've been tempted to do that once or twice. I'm guessing you have too. Um, but it's not that it has to be your first home. So you can
Oh,
have owned a home previously. You just can't own a home right now. You
that's cool.
can't. You and other adult
Oh, you froze. Crap.
Sorry about that, Denny. Can you hear me?
Yes.
I may have a little blip there. Um, so the occupancy requirement for NACA mortgages is more strenuous than for your typical conventional mortgages. So for a typical conforming loan through Fannie Mae or Freddie Mac or other types of conventional mortgages such as FHA or VA, you have to live in the property for at least 1 year, and then you
Right.
can move out of the property and keep it as a rental, move into a different property, whatever. With NACA mortgages, you have to remain living in that property for the duration of holding that NACA mortgage.
Okay.
So, and again, NACA puts that junior lien for 25 grand against the house to enforce
Enforce.
your compliance here. So it's not like conventional mortgages where you can move into a property for a year and then move out, keep it as a rental, and just rinse and repeat. With NACA mortgages, you have to stay living there, and if you want to move out, you got to refinance if you wanted to keep that property
Okay,
as
so
a.
that's option, obviously, you can refinance.
Oh yeah, yeah. But if you want to keep the NACA mortgage, you got to stay living in that property.
Okay, so in a way, you could build some equity and you could refinance. I mean, so you're not under the heavy regulations.
Absolutely, absolutely, no question. You can do that. Now let's talk a little bit about some of the income requirements here and some of the limits on purchase price and these other kind of nuts and bolts. So this program, the NACA program, is designed for lower income borrowers. Um,
Okay.
so and what that means is your household income must be less than 100% of the median income for the metro area, the metropolitan statistical area,
Okay.
MSA, where you're buying a home. So that's a pretty lenient.
Yeah.
That's yeah. So you just have to be under the median. So the bottom 50% of earners for your household. So that's pretty lenient, and they get even more lenient actually. You don't even necessarily have to be bottom 50% of median incomes or of incomes in your area. You can also qualify by buying a home in a lower income area. And even that is also pretty lenient. It means a census tract where the median income is less than 100% of the median income for your
Oh,
city,
wow.
your
Okay.
metropolitan statistical area. So that's also pretty lenient. It just has to be in that bottom 50% of census tracts areas for income. So
Right.
either one of those will qualify you for a NACA loan. And you don't have to qualify for both. You don't have to do both. It's one or the other. Either you're below the median income, or you're
Mhm.
buying a home in a census tract that's below the median income for that city, for your city. So there are rules there, but there's some leniency to them. Um, and
How
there's
about
also
home costs? Like,
yeah. So that's an important one as well. Also, there are limits there, but again, they're somewhat lenient. So for most cities in the US, the maximum purchase price, at least for this year, for 2023, maximum purchase price is
okay,
$484,350. So
that's
almost
doable.
half $1 million for a single family home. So that's a pretty lenient
Yeah.
ceiling.
I
Um,
mean, that's doable even in today's goofy market.
Yeah, yeah, and then they do make exceptions for high cost of living areas like San Jose, San Francisco, New York City. So the maximum purchase price in those areas is 726,525.
Wow.
So yeah, there are limits, purchase price limits, but they're somewhat lenient.
So even though you can't buy a multi-family, you could do house hacking. I mean, if you're, a couple and you have 3 bedroom, you can rent out a room.
You actually can buy a multifamily with NACA loans, which most
Oh,
people don't know. But that is actually the ideal use of a NACA loan, is to house hack a multifamily, especially if it's your first home.
oh,
So
that's
you house hack, you live,
awesome.
yeah. So you get no down payment, no closing costs, below market interest rates, no credit check. You live for free house hacking a multifamily, moving into one unit, renting out the
Right.
other units. And you can, of course, use the future rents of those other units to qualify for income for the mortgage. And then so you live there for free, and you use the savings that you would be spending on housing to go build your real estate portfolio, right? To go out and
That's awesome.
buy. Yeah. So house hack the multifamily with a NACA loan, and then you use all that savings to go get like portfolio loans to buy other rental properties or invest in real estate syndications like in our co-investing club.
Right.
So yeah, it's a beautiful program for that. And that's the ideal use of it. And of course you can get a single family instead. And there are many ways to house hack a single family property, from housemates to renting out storage space to bringing in
International
a foreign exchange
students,
student like
right?
you did. Yeah. So
Very
there's a
cool.
lot of ways you can do that.
So do you go directly through the NACA program, or are there, how like some of these programs you can go through a loan officer or
Yeah. So NACA is not a lender themselves. They're a nonprofit that collaborates with other lenders. So
okay.
lenders like Bank of America are like partnered with NACA to offer these loans. So a lot of the larger mortgage lenders, I believe Wells Fargo is also partnered with NACA. But yeah, NACA they partner with big mortgage lenders. So when you reach out to your local NACA office, they'll put you in touch with qualified mortgage lenders who work with the NACA program.
It's really a great way, especially for like a newbie young person who wants to buy a home. Um, there's really no reason not to now.
Yeah, yeah, absolutely. Now, there's one other thing that's worth noting here. You can take out multiple NACA loans over the course of your lifetime. It's not a one and done thing, but there is a 5-year waiting period before you can take out another NACA
Oh,
loan.
okay.
and the same rules apply. You can't have any other properties when you take out that next NACA loan. So let's say you go out and you buy a property with a NACA loan, you house hack ideally, maybe even with a multifamily. You live there for 5 years, and then you get a little restless. You want to maybe upgrade to a more expensive property, or whatever. You sell that home, you buy a new home with a new NACA mortgage, but it has to be at least 5 years after you took out your previous NACA mortgage.
Okay.
And you can't have any other mortgage loans in your household, right? Or can't own any other properties. No one in your household can own any other properties. So
Right.
now I'm not 100% sure. I think that does apply to your previous home too, that you have to sell it before you can settle on the new property to get the new NACA mortgage.
Very cool.
Yeah. Yeah,
No
it's a
excuse
great
now.
program.
There's no excuse not to buy real estate at this point.
Yeah. Yeah, no, it's a wonderful program. It's not the only 0% down loan program out there, but it is more flexible than some of the others. So like VA loans are famous for having a 0% down
Right. But
program,
those
but you have to
are
be a
it's a
veteran.
right. And they're not as they well make you jump through hoops as well.
Well, that's true, although probably not as many hoops as the NACA mortgage
No,
program.
no, definitely not. Definitely not.
Yeah.
And then you
And
can
then
look for an ag loan or a USDA loan, but those you have to go like it's hard to find the areas
it has
that
to be
will
rural.
accept
Yeah.
them. Yeah, I mean,
Yeah.
way sometimes when they say rural, they mean out there.
Yeah, yeah, and that is designed specifically to promote economic development in
Right.
agricultural areas. So, I mean, you're going to be living in an agricultural area, in a deep rural area, if you're going to qualify for USDA loan in most cases. Um, so there are a couple other programs that offer low down payments, but not no down payments.
Right.
So, like. Um, Fannie Mae has a program called Home Ready, and
Mhm.
Freddie Mac has like a sister program. I guess if it's Freddie Mae, would be a brother program, or whatever, called Home Possible, and they're both very similar programs that offer a 3% down payment. But you have to have pretty good credit to qualify for those. Um, Obviously, there's FHA's program that's very famous, three and a half
Right.
percent down payment.
And then what's
And
good about FHA too is if you're working with, a seller, you can always ask for concessions to help you pay with down payment, so you can actually have less money needed upfront.
Yeah, yeah, absolutely. And then if you're an investor, you can borrow money through a rotating line of credit to cover the down payment. So we'll put a couple links here in the comments and in the show notes. A link to a place where you can apply to some of these loans and get lines of credit, and for an article with more details about exactly how the NACA loan program works. Deni, did we miss anything? Is there anything we didn't cover?
I don't think so. I think it's really cool.
Yeah, no, it's a wonderful program if you qualify for it, and if you're willing to jump through a couple hoops. But zero down payment, no closing costs, below market interest rates, no credit check. I mean, it's
It's
hard to beat that.
yeah, for 5 community things that you have to do a year, I don't think it's so bad.
No, no, it's not. All right. Well, on that note, we'll see you guys next Tuesday. Have a wonderful week and stay in touch. Support at sparkrental.com. And please, if you enjoy this show and the broader show in general, please rate and
Let's
review the
thumbs
podcast
up.
wherever you listen to podcasts. It's a huge help to us. Yeah, it's lets us reach larger audience and teach them about things like 0% down mortgages. So, all
Absolutely.
right. Have a wonderful weekend, you guys.
Have
We'll
a
see you
great
next week.